Good evening, friends. I am Nalnakshi Swami, coming up with one strategy, very good strategy for early entry secrets for intraday. What if you know? Because in intraday, momentum will be seen in the early hours, opening well in the first hour. So if you miss that entry, you are not able to gain much. So proper entry will fetch you good profits. And also, what if you know your entry is right? It is in front of you. If you can make out your entry is right, and so that your psychology will be in very calm situation. You will not go panic, even because why panic appears in the market? Because price fluctuates like anything. When price fluctuates like anything, your decision will become very weak. You will not hold the position even though you have taken an early entry, and if even if you have taken early entry, and also you cannot hold the position by fear of losing the money. So today I am going to bring one early entry secrets for this intraday trading. Here we are using a time weighted average price. You heard it right. Time weighted average price. What new in this? It is different from the classical moving average, whatever we are using. Here we are calculating the time-wise weighted average price. That means, for example, how we are calculating this time-wise weighted average price is, for example, here from starting from 9:15 to 10:45, how many candles are there? 1, 2, 3, 4, 5, 6, 7 15 minutes candles are there. So actually each candle closing price assigned, given weightage. For example, this first candle is given 1 weightage. For example, it has been given, since it is a first candle, we are giving 1 weightage. What is the closing price of this candle? Just for an example, I am showing it to you so that how the calculation is made. If I place the cursor on this candle, the closing price is 24,133. 24,133. And for this candle, I am giving weightage 1. So, since it is the first candle, I am giving weightage as 1. Next candle, the close price is 24,083. I am writing it down. I am showing it for only 2 candles so that you can understand. For this candle, I am giving weightage 2. What I'm doing is I'm multiplying this into the weight. That is 24,133 into 1. That fetches me same value, 24,133. And again, what I'm doing is for the next candle close, it is multiplied, since I've given weightage to 24,083 into 2. 24,083 into 2. I get the value 48,166. 48,166. So I add up these two values, 24,133 I'll add up to this 24,133. I get a value 72,299. 72,299. Then after adding up, I add up these weights too. Then if I add up these weights, 2 plus 1, it gives me 3. Okay? Then what I do is I divide this 72,299 divided by the weights 3 is equal to I am getting 24,099. So the weightage of these candles, weighted average price of this candle is, these two candles comes to 24,099. Okay. Let me place the horizontal line here and adjust it to 24,099. Oh, even that also I have to adjust. It's a trend line. 24,099. Okay. When I adjust, this is the average price of the two candles. Weighted average price of these two candles is here 24,099, and the second candle, it has closed below this 24,083. For me, it acts as a guideline. If the price starts trading above this, it becomes a positive thing. Then I can go long. Here, you could have seen after the getting this average, the price started moving up and it was a bull candle. In live market, it is a bull candle crossing above this average. You would have jumped into the trade before closing of the candle that has wicked above and closed down. Okay? This is how we are going to calculate the weighted time-wise weighted average price. So you may ask me, what is this bullshit? How can I, instead of trading, instead of concentrating on my trade, how can I go on calculating this? It is so tedious. I'm explaining how this time-wise weighted average moving average price is calculated. So here, it's an advantage in the trading view is we have got that indicator. If I type T time-wise weighted average price, note down here, time weighted average price. This is how that time weighted average price is calculated. Okay. If I apply this indicator, you can also go and apply this indicator in your, no, nothing is needed for you. Okay, I have applied this indicator already. I'll enable this. I've made a strategy based on this. First, time-wise weighted average price. If I go to the inputs, anchor period, I'm using 4 hours. And the time frame what I want is, I'm using it on the 15 minutes time frame. So this black line will give you 4-hour weighted average, time-wise weighted average price. It goes back to all the 4 hours weighted average prices and it calculates the average price, and it has simplified that. It has been coded like that. You are getting that. First one time, I'm using 2 time-wise weighted average price indicator. In the first one, I'm changing the color to black, and the input section I'm using 4 hours anchor period, and the time frame what I'm using is, because I'm trading in the 15-minute time frame, so I'm using this time frame. Suppose if you are trading in the 5-minute time frame, you can change it to that. Okay. Next, another indicator what I'm using is same indicator I'm using with a time frame. Anchor period I'm using 15 minutes, as well as the time frame is also 15 minutes. So that is shorter period of time-wise weighted average price. So what I'm going to see is I'm getting the hourly, 4-hourly weighted average price already for today's trade. You can see today already you have got this time-wise weighted average price. If I place the cursor on that, you are getting the value 24,156. Okay. And this time, shorter time period, time-wise weighted average price is giving the value in crosses below. That is the strategy. It crosses below, and you can see a bearish candle closing below the hourly time-wise weighted average price, and you can comfortably take the short position. And your guideline is this time-wise weighted average price, and also another you can place level, yesterday's top level 24,209 as your stop loss. So you will be exiting trade only if it goes above 24,209 and also 24,156. Okay, intraday also it is a guideline. It started coming down. You can see after 1, 2, 3, 4, 5, 6, 7, 8, you can see bend in this shorter period weighted, time-wise weighted average price. Here, the reading it gives you 24,011. Later, you are seeing a very bull candle, next candle, bull candle. Why it is very significant bull candle is because it was engulfing the two bearish candles. That means it is making an higher high. That is a reversal. You can take a short call trade in this, and your target will be defined already. See, this is the already I have marked the 24,156. You are closely watching this level because it is a short trade. It is a intraday reversal. That's it. Intraday short scalp you can do in call option. Here you can close your put option if you have entered into that, and then it started. You can clearly see so beautifully. No Fibonacci tools, nothing. You can use this tool. You can use this strategy. It is very, very good. It works. For this, you need to master this. You need to master this. You need to work on this on all situations because market presents so many types of patterns. Market today's move was a type of whipsaw movement. It was going up, coming down, it was not a straightforward fall. Even though the market direction was negative, in between it started moving up and down. See, if it starts moving up, you will get confused. You will get confused. You will start thinking market is reversing and you will go long. You will go long. Direction will be, actually it is like making the people tying cloth to their eyes and turning around. So you will think market is going up and you will go long and you will keep stop loss here, somewhere here without any indicator or anything. You will anticipate market to go up. It may be a small retracement. It may go up like that. You may think like that. But this time-wise weighted average price is telling you, I am the barrier because these are the sellers. Time-wise weighted average price cannot bend like this, cannot come down like this, because it is the big money can only make the time-wise weighted average price to come down. Only big money can push the market higher, not the retailers. Retailer money cannot push the market higher. So it acts as a guideline. See, you can see here, at this point, when it comes down, at this point, the time weighted average price was recording 24,098. So when it starts moving higher, you will come to know the barrier, this barrier. You can keep this as a barrier, 24,134, because it has reduced here. You can see this candle moving up to 24,121, this candle. So you may get confused. Oh, again, market is trying to go up, you will go. Because the structure will be forming, price action will be forming, you will not come to know the direction of the market when this type of situation is presented in the market. So when this type of situation is presented in the market, this is the best indicator. Time-wise weighted average price will tell you who is dominating. So seller is dominating in this area from the beginning of the trade. So you could have gone short in the market, you could have held. But what happens in the call option and put option, if it goes sideways, both the CE and PE, the premium will decay. Premium will go down. And that is the thing in option trading. For option trading also, you can apply this indicator for option trade and you can see. I will show it to you that also. If I go back to this previous day, you can see this black line. In the morning itself, this shorter period time weighted average price crossing over, and the price is comfortably staying above the hourly, 4 hourly, longer period moving average. So you should not have gone short because no barrier, even though there was intermittent bends in the shorter period time-wise weighted average price, but it is not at all crossing. So you could have kept your position intact till the end of this. See, till the end of the journey, till closing, you could have held the position. And while closing only, you could have seen the crossing over. That indicated the weakness. A day before, yesterday itself, it had indicated the weakness, and you could have anticipated for a down move in the market. Now, today for Monday, the weighted average price, what you are getting is, I'll put Alt C here, and you are getting the reading. If I place the cursor also, you are getting 24,040 is your guideline. So we will come to know how the market will open on Monday, whether it opens above that or whether it is opening below that, below to the support, because there is one support over here. Intermediate support around 23,938, and you can anticipate for market coming down and retracing and start moving higher also. So you will get a guideline for all these things. I hope you understood how this time-wise weighted average price is calculated, because you should know the logic behind this weighted average price before using it, so that you will not do, you are not trading blindly or using the indicator blindly. So this will help for your early entry. It is a secret actually for intraday. Nothing. I am not using anything. I am using with the price only. Price with the time-wise weighted average price I'm using, and it has been coded in the trading view. They are giving this indicator for free. You can apply because you can apply two indicators. I've built a strategy with the lower time frame and shorter period and the longer period when is necessary to know the trend of the market. So when the trend is down, when the shorter period is coming below the longer period, and it indicates that price is weak, so you can go comfortably short in the market. This is how you can build one more intraday strategy. It is very easy. Try, master it, see for yourself, and master this trading strategy. This is for you people. I'm giving it as a gift. Thank you very much, friends. Nalakshi Swami signing off.